we're going to fix it. But fixing it's not a straight line. It's a crooked line with pain and missteps and all the usual crap. But we'll get there. It'll get better. I mean, I'm quite bullish about the world that my kids and grandkids will live in. But I'm a little bearish about the next 5 to 10 years. I think, I not bearish. I would just say, brace yourself, because I think there will be turmoil. I mean, I've lived through 2008. I lived through 2020. Obviously, you did too. 2000. I mean, I've seen this movie, and it's a roller coaster at times, as you know.
Yeah, it's turbulence, perhaps short-term pain for long-term gain.
Exactly. That's exactly what it
can be adopted by the Trump admin.
That's exactly right. That's the right way to view it.
Bitcoin's meteoric rise from its humble beginnings in 2009 to a staggering $87,133 in 2025 is far more than a financial story. It's a symbol of how disruptive technologies can reshape the landscape. From its first significant surge in 2011 to $29.60, followed by a sharp decline, Bitcoin then skyrocketed to $20,000 in 2017. However, just as quickly, it plummeted to $3,200 in 2018. Bitcoin's price movements over the years have been nothing short of a thrilling roller coaster ride. Each time it dipped, it found a way to rise again, proving its resilience and defying all expectations. Veteran investor Larry Lepard encapsulates this perfectly. The process of fixing what's broken is never smooth. It's messy, unpredictable, and fraught with turbulence and pain. Whether in finance or Bitcoin, real change is never linear. Despite the chaos, Lepard remains optimistic, understanding that such upheavals are essential for real transformation. He believes that the most meaningful progress often comes during the most tumultuous periods, where the true value of change is realized. As Lepard anticipates more challenges ahead, Bitcoin's potential remains undeterred. According to the popular crypto analyst Titan of Crypto, on X, Bitcoin could soon break through even higher levels. Bitcoin $137,000 in the cards, he teases, noting that with a bull pennant forming on the daily chart, a new all-time high could be within reach, despite the market's current mood. However, according to Lepard, Bitcoin's roller coaster journey is far from over. It's just getting started. We will now bring you more clips from Larry Lepard's latest interview. Please don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
It's going to be a very interesting couple of years, and it has, a lot of implications for gold and Bitcoin. I mean, we didn't talk about it much, but one of the reasons why I'm absolutely convinced we are really in it right now in terms of what I call the sovereign debt crisis was just the relentless upward motion of gold. I mean, gold was up 50% in the last year.
Yep.
From 2070 to 3150 or until today I think it's down $70 or something. But as a result of when you have an event like what just happened and the markets go down, we've got a very strong possibility of all correlations going to one, where everybody sells everything because they're margin calls, and we still have a fairly highly leveraged system, and that's shown by the work that James Lavish did on the basis trade. And the way they're talking about putting a line of credit in to back up the hedge funds that are in the basis trade to help buy the treasury bonds. It's going to be a chaotic environment. And what I counsel all of my clients to do is to own things the government can't print. And they can't print Bitcoin, they can't print gold, they can't print real estate. I put real estate at the bottom though, because they can tax it, and they will. But I think that's your best defense mechanism through all of this turmoil, and to not get shaken out of it. I mean, in a correlation of one event. I remember March 2020. Bitcoin and gold got badly hammered in the beginning of that downturn, and then of course Powell came in with his fire hose, and they quickly recovered and went screaming to new highs.
Yeah, we went from 10K to 3K in Bitcoin, and then the title of your book, we had a big print.
Big print, right. And the title of the book is The Big Print. It's interesting. I was very afraid I wasn't going to get it out before the next one occurred. And so I kind of rushed to get it out, and a couple of typos in there that are angering me, but we'll get the revised edition out without the typos. But, we've already had two big prints. We had one in '08, and then we had another bigger one, in 2020. And all I'm saying is this pattern will continue, and I think the next one will be bigger than either of those two.
Absolutely.
So it's coming, and I don't know when, though. A lot of people say, "Oh, tell me when." I don't know. I'm pretty sure within a 2-year window.
Absolutely.
Maybe a lot sooner, but certainly within 2 years. The stock market doesn't like it, and the stock market's very overvalued and vulnerable anyway. So as somebody, I was reading somebody this morning said, Trump kind of threw a grenade into the world economy and is going to see what happens. I mean, I don't know. It's a tough thing to call. The structure of the world where we printed money and shipped it out to other people, and they made cheap goods and sold them to us and accepted the money. It's clearly we've reached the end of that rope. I mean, just the mathematics of the debt problem are so large that we've reached the end of that rope. And I think what Trump and Bessent are hoping is that they can disrupt that and put a brief end or an end to globalism, or at least try and restore fair trade, which we really haven't had for 40 years. So I mean, it's unfair that we have a disadvantage as a result of being the reserve currency, having a strong dollar. Our manufacturers and producers can't or don't sell as much overseas. And Trump and Bessent have rightly recognized that the U.S. consumer base is a big important market, and we shouldn't just necessarily let people access it for free. That and there's a cost to doing so. I mean, the cost is that, as we saw in COVID, we didn't have enough medical supplies. Because as we've seen kind of in this war in Russia, we haven't been able to send enough shells and missiles and so forth. So. And this is all because, the manufacturing base of the U.S. is hollowed out. And so he's thrown he's put a real flag in the sand, and he's thrown a kind of a grenade into the economy and saying, we're going to change this. And, I have to say, on balance, I generally speaking agree with it. I'm not sure, I don't believe that Bessent or he really fully understand all the implications. I'm not sure anybody can. But my sense is this is going to be just more than just a little bit disruptive. I know in talking to other investors this morning, their kind of thought was, well, he's just playing chess and he'll back off of this, and this isn't serious, and the markets are going to be okay. And I'm not so sanguine. I think this might be the pin that burst the stock market bubble, and I do believe the stock market is in a bubble. So it's kind of put on your helmet and cover your head time, and at least in equities, in my view, because tariffs. I mean, we saw in Smoot-Hawley in the Great Depression and other times, tariffs are very, very demand dampening, recessionary, etc. And and they're like a tax, and effectively they're inflationary because they'll make everything that we buy from overseas cost more. So, I get it. I get the strategy of trying to bring manufacturing back to the United States, and I applaud that. But I don't think, this isn't easy. I mean, we're ripping off a really big Band-Aid, and it's going to hurt. That's kind of the way I look at it. So this globalist system got built up, post-World War II, and really accelerated post-71 when we abandoned the gold standard, and really, the U.S. became a financial country, not a manufacturing country. That's a lot of years to build something up. Trump's in office for 4 years, and so you don't reverse that big a trend that's that entrenched in a short period of time. But at the margin, you can turn the tiller on the ship, and the ship will start to turn, and people will start to reshore, and so on and so forth. I mean, as a practical matter, there are things that are bought overseas or produced overseas that are produced with very low cost wages, and Americans aren't going to want to match those wages. So, I mean, you go back to classic Ricardian, comparative advantage. If a country has low cost wages and wants to sell their goods for a low cost, and the country has, a higher wage base and wants to buy them, they should both win. I think what Trump's trying to point out and what he's reacting to is really back to the monetary problem of having the world's reserve currency in Triffin's dilemma. And so as a result of, it's one thing if, each country does what they're comparatively better at. It's another thing if they do what they're comparatively better at, and one country has the reserve currency, so they have to run deficits to keep the whole thing going. And so, as my book points out, if we were to go to a neutral reserve currency, which I think we are in the process of doing, which I think will naturally happen, then we can get back to a low tariff world, and low wage countries will produce low wage stuff, and that's okay. It's the currency piece that, in my view, has caused so much of the damage and the problem. They moved forward with a strategic Bitcoin reserve. They haven't agreed to purchase any in addition to what they hold. Bessent is clearly a smart guy and clearly gets it. And yes, he said, there's a Bretton Woods that's necessary, and I want to be at the table. So that's where they're trying to move us. They're trying to push us in that direction, doing a lot of admirable things. I mean, Doge was an admirable effort. In my opinion, it's too little too late. The problem's too acute. But, I think the answer is yes. They are trying to take us to a better place, and that's where we should be going. But as you said, medicine doesn't taste good. And so, you know, and they're going to have to get better at their messaging because the Democrats have already started saying, look at what Trump's doing. He's blowing up the stock market, and there goes the value of your 401k. And furthermore, if all these tariffs come in, goods are going to be more expensive and inflation is going to be a problem. So he's got to do a better job of pointing out that he inherited a very broken situation. He's trying to, at first principles level, fix it. But the fix isn't going to just happen overnight. And there's going to be bad tasting medicine that we are all going to have to take as we adjust. But I think, he's rightly pointed out, if you think about who elected him, you think about who owns stocks. I mean, stocks are owned, 92% of the wealth in this country is owned by the top 1%. And the balance of the stock market is owned probably by the top 20%. And the middle 50% and lower probably don't own any stocks. So their view is, hey, if all these stocks go down, it doesn't bother me. And that's a correct view until all these stocks go down, we enter a recession, the companies decide to start cutting back employment, and they start losing their jobs. And so it does affect them. It just doesn't, it affects them with a lag. But yeah, it's very clear, though, that the policies that existed pre-Trump were very much elitist policies designed to financialize the economy and reward the top 1 to 10%. They didn't care much about what happened to the balance of the country. And Trump was elected by the balance of the country and is trying to fulfill his mandate to do things that are in their best interest. And I think he's doing that.
Trump has just sparked the fuse on the global economy's ticking time bomb. For years, America relied on others while Wall Street partied, and now the bills come due. His bold tariff moves could either revive U.S. factories or set off a catastrophic market collapse. Think inflation on overdrive, market madness, and a currency shakeup with Bitcoin waiting in the wings. The elite are nervous, while Main Street celebrates, but will this tightrope walk destroy the system before it saves it? According to Lepard, one thing is clear: the era of easy money is over. Wall Street's illusion is collapsing. Decades of free-flowing cash inflated valuations to historic extremes, worse than 1929 or 2000, while Main Street sank deeper in debt. Now, the reckoning is here. Trump's tariffs are starting to pull apart the shaky foundation of speculation. When it all comes down, the Fed will be powerless, markets will dive, and retirement funds will vanish. Let's watch more clips from the interview.
When I look at any market, I try and look at it and kind of say, what's the thing that everyone believes to be true, but maybe it's not true? Because if that's how you gain an advantage, right? And you think, and then if you're correct and you bet against it, well, you get paid for seeing something before everybody else does. And I would say the thing in my mind in the world today, there are two things that I think a lot of people believe to be true that I think are untrue. I think one, a lot of people believe that the bond market will be okay, that inflation is being tamed, that we will ultimately get back to our 2%. And that COVID was just kind of a one-off example in a very long deflationary slide. And so, don't worry, things are going to be better on the inflation front. I strongly disagree with that, and my book talks about it. The second thing that I think a lot of people believe to be true that's not true is that the stock market always goes up, and that, it provides you with great rewards, and you've got to buy the dip. And because, frankly, since '08, that's worked. With a couple of pretty severe dips, but it's worked. And if you look at the stock valuations today, the work that John Hussman's done, I put the charts in my book. We are at a valuation level, overall valuation level in the stock market that puts us higher than 2000, higher than 1929. Both of those cases, in 2000, NASDAQ went down 80%. In 29, the S&P went down, or Dow went down 80%. And, even in 2000, the NASDAQ went down 50%. And so I see the stock market as being very vulnerable. And when you start, making moves like they've made in terms of, these tariffs, this is like playing Jenga, right? You've got this big tower and you're pulling out blocks. And, I'm not sure which one is going to cause the whole thing to fall over, but I'm nervous. So a lot of people are like, well, the stock market is correct 10% and everything will be fine. I don't see it that way. I think the stock market is in trouble because I think, the reason, let's examine just for a moment, if you'll indulge me, how the stock market got to this point of view. We had 0% interest rates from '08 to 15, and then we had 0% interest rates from 19 to 22. And when you have 0% interest rates, that means basically borrowing money is free. And so what do financial operators do? What do quintillionaires do? PE people, hedge fund people, Wall Street people? They borrow low-cost money and they invest it in stocks and carry things that have a carried yield that will go up in value. And that's how they benefit from the financial inflation that's taking place. But the problem with that is it leads to those assets getting extremely overvalued. And it also leads to, in most of those cases, there was QE going on, and credit expansion through the banks. So the money supply was getting larger. So it also leads to underlying inflation. And the average working person, they don't see their wages go up, but they see the cost of groceries going up. And so therein lies the problem. And that's what Trump's trying to address. And to bring the two sides together, I think we do need to fix the money. I'm not as hopeful maybe as I think I heard you being that, things will get solved in the next 4 years and we'll move toward that fixing of the money kind of, linearly and naturally, and it'll get fixed and everything will be okay. I hope for that outcome. I pray for that. That would be a really great outcome. But I worry based on looking at history and how things have happened in the past in other countries that have behaved the way that we've behaved. It's going to be rather more chaotic. It's going to involve high inflation, and it's going to involve perhaps a real serious downturn and a lot of liquidation of overpriced assets, and that's not necessarily going to help with the social fabric. The social fabric gets wrecked when the dot-com bubble burst. A lot of people got hurt. When the housing bubble burst, a lot of people got hurt. When COVID came along, a lot of people got hurt. I don't know that we can just casually and linearly and intelligently transition to sound money. I'd like to think that we can. I think if the government policymakers were smart enough, we could. There's a chapter in the book called Policy Responses, and I actually drafted the speech that I would give if I were president of the United States. And so it's an interesting, view. I'm basically trying to say what Keynes has been doing. The Keynesian model is wrong. It's broken. We've got to return to sound money. So, I believe, Joe, that we will get to sound money one way or another. But that I have high level of confidence in because people tend to trend towards the best solution over time, even though everyone doesn't get it in the beginning. What I have a lot of trouble with is predicting the path from where we are right now to that endpoint. I think it's going to be up, down, sideways. And honestly, Trump could maybe make a lot of progress here. But if it's not enough, in 4 years, blue team might win because the voters, we're in a fourth turning where all the rules are changing. And all the rules are changing, particularly around the monetary system, which was flawed and built up on Keynesianism. And when all the rules are changing and things are tough, it's not uncommon for voters to, just to pick the other side. Okay. So as much progress as Trump makes, it might not be enough. And in 4 years, screw that. That's not working well enough. We want blue team back, and so they'll elect blue team, and blue team will come in and they'll demonize sound money people and they'll tax the shit out of everybody. And, we could bounce back and forth between these kind of two extremes for a little while until we sort it all out. Now, you got to remember this is politics, and a lot of politics is optics. And, there are others who kind of came out and said, this is really brilliant because what it makes people realize, it makes Trump look beneficent and fair. Because what he's kind of saying, okay, you're going to tax us, you're going to tariff us at 60%. Well, we'll tariff you. We won't come back at 60%. We'll come back at 30%. We'll give a 50% discount. So, and all these numbers are kind of made up because the tariff really isn't the 60%. That's really the amount of the deficit, reflected in the form of a tariff, correct? What it would take to correct it. So there's a little bit of sleight of hand, a little bit of branding, and a little bit of, just spin on the part of the Trump administration to make it look like, hey, these guys are treating us unfairly. And, we're going to show how magnificent we are. We're not going to treat them entirely unfairly, but we're going to treat them half as unfairly as they've treated us. And so, okay, that's fine. And I think, to the average American who doesn't really dig into it, that's a pretty compelling pitch. So I don't know. Look, at the end of the day, it just is what it is. We're basically pushing back hard on countries that have taken us for granted. And I think that's appropriate. It's very much appropriate.
As global economic turbulence intensifies, Bitcoin's potential as a safe haven asset is gaining attention. With growing concerns over inflation and the weakening US dollar, Bitcoin's appeal is only increasing. Arthur Hayes, co-founder of BitMEX, suggests that the US Treasury's buybacks could be the catalyst needed for Bitcoin's next leg up, potentially pushing it above $100,000. Treasury buybacks are expected to inject liquidity into the financial system, benefiting risk assets like Bitcoin. This sentiment aligns with the broader market view that Bitcoin's increasing scarcity, triggered by events like the 2024 halving, combined with institutional interest in Bitcoin ETFs, could drive the cryptocurrency to new highs. Despite concerns over global trade tensions, Including the US-China trade dispute, Bitcoin has shown resilience, climbing over 33% since its halving, with projections suggesting it could surpass $132,000 in 2025. The strengthening interest from institutional investors in Bitcoin, particularly from Japan and the UK, signals that the 4-year Bitcoin cycle is accelerating, with the cryptocurrency poised for its most explosive bull run yet. Larry Lepard's observations about disruption and transformation also echo in the current crypto landscape. Just as in previous crises, the financial system's instability is creating the pressure necessary for real change. As Bitcoin continues to mature, the growing adoption of cryptocurrency and regulatory clarity will lead to its next phase of growth. For those invested in the space, the message is clear. Bitcoin's future looks brighter than ever. As we wrap up, what impact do you see the weakening US dollar having on Bitcoin's price in the coming months? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.